the stock which is currently on our radar is Justdial. It should come up on your screen. It's higher by close to about 1 to 1.5%. A fairly steady set of earnings from Justdial. Their revenues and margins were slightly lower than what the street was anticipating, but the profits managed to beat on the back of a higher other income. Ramkumar the CFO of the company, now joins in. Good morning and thanks so much for joining in. First, let me start with your top line growth. The revenues this quarter have gone up by 26%, but this seems to be at the lower end of the company's recent growth range of 26 to 31%. Any particular reason for that, and what is your outlook on revenues going forward?
Yeah, traditionally if you look at it, even last year, Q4 we grew 27%. And this year we ended up with 28%. So normally what happens is, it's a bit of a front-ended, I would say, because Q3 was a slow quarter in terms of number of holidays, etc., which impacts the accrued revenue for Q4. That happens, every year. So you would see actually we had one of the best quarter in Q4 in terms of our collections and our sales, and if you see the number of contracts also. So this has been a good quarter. All I would say is that we maintain the growth rate between 25 to 30%, and we are quite confident that the revenue growth will be in that number.
Okay, so the company maintains its growth rate of 25 to 30% even going forward. But let's focus on the margins. Your margins in FY15 have declined from 31% to 28%. What's the outlook on margins for the coming year?
Margins, we have always maintained that excluding the ESOP expenses and one-time, the one-time advertising spend that's likely to happen, we maintain that a stable margin, because as I mentioned, the 31%, perhaps maybe give here 100 basis points here and there. I would say that because we are still in an investment stage as far as Search Plus is concerned, so we would continue to invest in the FY16 as well. So given that we maintain a stable margin, so you have to acknowledge that despite investing in Search Plus and being ready for commercial launch, we maintain the same margin on a like-to-like basis year on year at 31%.
Okay, since you spoke about, the one-time ad spend, any particular reason this ad campaign for Search Plus has been delayed, and has there been any change to the total amount that you will be spending in terms of your campaigning for Search Plus?
Yeah, so now there's no change in the number that we said earlier. It will be in that ballpark range of 100 crore that we said. But see, the product is ready. It was factors beyond our control that has forced us to sort of change the date. We are quite confident that should happen in the next couple of weeks. We have got some, internally we are prepared that it should happen in the next couple of weeks. So whatever happened earlier was factors beyond our control.
Okay, so just to reconfirm, the commercial launch for Search Plus will happen in the next few weeks.
Absolutely, you can take in June it should happen.
Okay, the company has just announced that you will be doing a buyback. In fact, you have a board meeting which is scheduled in the next few days. Now, the total cash in the books is 815 crore. Can you give us a sense how much will be, what percentage of this cash you will be using for your buyback?
See, as per the statutory regulation, 25% of your share capital and free reserves you can utilize for the buyback this thing. So if you look at, consider that, it's about 170 crore.
All right, 170 crore is what the company will be spending in terms of their sales. By the way, those are Maruti's May sales. The total sales have come in at 1.14 lakh units, which compares with 1.11 lakh units. The stock is reacting, to these numbers. We'll just try and pull up what the estimates were for, the auto sales, but just to quickly run you through them, we were working with total sales at 1.1 lakh units. So at 1.14 lakh units, this seems to be slightly better than what at least Nomura was anticipating. We'll await the breakup. In terms of domestic, we were anticipating it to come and grow at about 9.5%, while exports would grow at close to about 6%. But as of now, we only have the total sales. It's gone up on a month-on-month basis to 1.14 lakh units versus 1.11 lakh units, and this seems to be slightly better than what the street was anticipating. This intraday of the stock also should come up on your screen, and we'll await the total, the breakup of domestic and exports. But for now, the total sales are looking healthy at 1.14 lakh units. The stock is gaining ground at the high point of the day. This is better than what Nomura was anticipating. So that is the update on, Maruti Suzuki. We'll just, wrap up a conversation with Mr. Ramkumar Krishnamachari. Finally, your margins have been impacted because of your ESOP costs. Now, that stood at close to about 15 crore in FY15. What will be the anticipated ESOP cost in FY16?
Yeah, I mean, look, it's a non-cash thing. Definitely, yeah, it's part of the expense. And as I mentioned, about 100 crore would be spent in a span of 5 to 7 years. That's what the 700,000 options that we have given to employees. So you would see that a lot of these expenses are high in the first initial years, and then it will keep coming down. So next year also you will see similar, maybe 14, 15, 50, around the same amount, similar amount hitting the books.
All right. Thanks so much for joining in. Some more details on, Maruti Suzuki. As we pointed out,